Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, June 19th, 2016. Hope you guys are having a fantastic weekend and let's get started. So the markets were under pressure on Friday, and I had put in the morning notes that you just want to be careful pressing the short side, just because with any new low like we saw, it was going to give us some bullish divergences, and we were, quite oversold on the 60-minute charts. So we saw some early selling. The low came in right around that 2063, and it rallied 8 points to the upside for the close. But the thing is that it would actually make sense if we actually go up into somewhere up into this 2085 first. And the reason why I kind of like that area is, you know how I love to figure out these, these patterns before they actually take place. So I'll show you what I'm talking about here. Oval. So this will be the inverted head and shoulders that I show a lot. And I can see them trying to play that out, where this could be the shoulder right here. And if that's the case, then the neckline is going to be right here. So if this is the actual, where they're making the shoulder, that would give us a target someplace up into this area here anyway. So I would definitely be, just give the bulls some time to try and work. I'm not bullish on the markets at all, but I think I think there's going to be better areas to short than where we are right now. And you want to just take a little bit off the table when you get the big drops, and then from there you start scaling back in again when you get the bounces and we start getting some bearish divergences in place. So on the fib level, you can see that we have 2077 is the 38% retracement. Now we have a moving average as well as the 50% retracement. We also have this price resistance, and that's right at that 2085. So the bulls are going to have a really, really hard time trying to get through this. If they do, I think there's going to be a reaction short covering trade that will bring it someplace up into the 2093. Now, there's a good shot it comes up here, and that's all it is, and then we head down. So I would stick with shorting rallies. That's what I would be favoring. And I would just be patient. If we head down, you could always jump in a little bit. But I still think because of these on the 60-minute charts, these bullish divergences here, I think it could be a little bit more of a bounce than what we've seen so far. So you can see we're pretty oversold here, bullish divergences, and this pattern right here that I was showing you, the bearish triangle here, this played out because really the target area is like the base here, someplace in this area. So this, it worked. The pattern's now done. Does it mean that you have to get bullish? No. It's just that this was the target for this pattern. It came down, reached it, and again, just looking at the moving averages here, you can see at that 2084. This is gonna be some heavy resistance right here. I think the bulls are gonna have a little bit of a tough time pushing through there. And like I said, if it gets up there, that's where I'd start, building, layering in a little bit more on a short position. From there, let it and just keep going all the way up to the 2097 or wherever you want to go to. But building a short position with any strength, I think could work out very well. But right now, like I said, I'd be a little bit cautious jumping short just because of the bullish divergences and the pretty oversold levels on the 60-minute charts. So the reason why I'm really kind of bearish on this market overall is you can see we broke through this resistance line, but these bearish divergences that are in place, this is saying that we really could drop below the 2000 and possibly even down to the 1940 or lower than that. We still possibly could be doing this head and shoulders pattern, so we may find buyers come in right around that 2022, and then they rally it back up and they make the right shoulder. So again, this pattern's not in place. It's just something that could play out, in the future if we get some kind of bounce. But I would stick with, like I said, I'm pretty neutral on the market right now, short term, just for like the next couple days, just because of the bullish divergences has me, expecting a little bit more of a rally than what we've seen, and I really just want to use that rally to start building my short position up again. So with that, let's see what plays out tomorrow. Enjoy the rest of your weekend, and I'll talk to you guys in the morning.